everyone, it is Evan here from the Trade Risk on Friday, April 12th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and finish off looking at some sector analysis. So we're going to jump into our dashboard here, take a look at how this week progressed. We saw the major indices green across the board to finish off the week on Friday. Earnings season sort of officially getting kicked off with some financial earnings helping fuel the market there on Friday. 5-day change numbers mostly positive, and we can see that we are above all of the key simple moving averages across all of the major indices and above last week's highs. So the bull trend here continuing to the upside. When we look here at sectors, we saw financials jump to the top spot. This again fueled mostly by Friday's gains and some of the lift there we saw just late in the week, followed by transports and semis. On the downside, we saw a little bit of rotation out of biotech, healthcare, and energy, quite flat here to slightly negative. On the major market front, we have oil, which is up top 1.1%, pretty weak gains overall in the top three here. But we have USO, we have high yield, and we have the S&P 500. And on the downside, we have volatility, which 5% to the downside coming out of there, and TLT also seeing a little bit of an unwind along with China. So let's jump into let's jump into the S&P 500. Let's take a look here at what went on the weekly time frame. This is where we like to start the analysis, and this is a weekly chart, so each bar represents a week worth of trading, and this is the cash market. So when we look here at just what progressed this week, we did start off, which when we look at the daily chart, we'll see it a little more clearly, but we did start trying to sort of probe a little bit lower to start off the beginning of this week. We saw that kind of gap down or a little bit of uncertainty on Monday, Tuesday session, and that weakness was ultimately, bid up. There was no follow through to that weakness, and we ended up reversing and closing strong on the week. So here we are with another week of gains tacked on to this rally that has, started and really just completely ran away all year long, continues to grind higher here. The MACD on the weekly chart continues to make new highs, and we are above this 2872 area, 2941. Those are the all-time highs, approximately the all-time highs made back in 2018, and it seems at this point that it's just a magnet. It is destiny to see this market retest that area. It's about 1% away from those all-time highs at this point. Of course, it doesn't have to, but that's certainly the logical spot that the market is headed to up there. Kind of see what the reaction is as the S&P 500 starts to test that area. That's what we want to be paying attention to. Otherwise, if we start looking at downside levels here, 2872, that's approximately this week's lows, and then we have that big, kind of psychological level we were grappling with, 2800. The market spent a lot of time chopping around there just last month. That's what we'd pay attention to on the downside as well. So trends are higher. We're coming into prior all-time highs. That's the logical spot we'd look for this market to retest and challenge. But of course, nothing happens in a straight line. Nothing is ever easy in the market. There are signs of complacency, of course, and when we look at the VIX, especially today here on Friday, almost closed at an 11 handle here, which would have been the lowest that we've seen in quite some time. But you can see it just around 12 here. We definitely have seen fear come out of this market, lots of complacency kind of step back in, and there's generally a sweet spot that the market likes to trend in while the VIX is low. This has been seen before in past rallies, like in 2017, 2016, even parts of 2018, when the VIX stays subdued and the market trends. So it's not, it's not the rush out and buy everything, load up on puts, although, certainly it could be a little bit of a shakeout or, something to that effect. But, unless you're tactically, managing and looking closely at those types of strategies, it's tough to fight this, as what has happened all year long is we have basically grinded higher with no selling pressure whatsoever. Until we get that follow through, the kind of logical progression I like to look for if we look at a daily chart is take out a prior day's lows, get follow through to those lows. That's really what starts the, potential pullback reversal. And until we start to get those things lining up, again, it's just it's a tough road to fight this trend. When we look here at the daily chart, we started to get that on Monday and Tuesday of this week. So I mean, Monday was the move higher. We closed higher here on Monday. We started off with a gap down and we closed strongly, and then Tuesday we kind of took out those lows and closed weak. And when we had our midweek video on Tuesday, this was the start, and we even presented a couple of different ideas on the short side, or at least one looking at the Russell 2000. If we were to get follow through below 2872 and we were to start to get a move back below these prior highs in here, then and we were looking at the IWM specifically on this day right here, which was Tuesday, as we lost this kind of trend line here. Let's switch over to the other view. As we kind of, on Tuesday here, switch over to this, we kind of had this uptrend in place. We had this nice horizontal level, which was the pivot high here for March, and we lost both those levels on Tuesday. And we talked about the potential to roll over here if we were to see follow through back below this day here. That's would keep us back into this old range, potentially get back down to the lows of it. And look what happened the very next day on Wednesday. We just totally reversed that action. We recouped all of Tuesday's losses and then some, closed strong, and then kind of, grinded towards the end of the week here. Not the prettiest two-day candles back-to-back Thursday, Friday, but, nonetheless, we are closing near the highs here, and I think we have the line in the sand to use again around that 156 and ultimately 155 for the Russell 2000. So the way I look at this, if we go back to the S&P 500, is, the sellers, the bears here kind of had their chance. They sold us off here on Tuesday, kind of shook us out a little bit, and we were waiting to see, okay, is this going to be follow through? Is this a pullback here? Is this something more meaningful than just a day shakeout? And, based on the weekend action here, the action as it progressed throughout the end of the week, that was not the case. Buyers just kind of resumed their role. The market rotated through sectors as it does, and it continued to grind out to new highs here. So once again, 2872, that's the short-term S&P 500 level I'm looking at. 2940, 2941, those are the all-time highs. That's what I'd be looking at 40 points above here for next week. So those are the two levels, and then again, 2800 below here. Don't overcomplicate it. The trend's higher. VIX is subdued, never short a dull market as the adage goes, and do respect the trends while they stay in place. When we start taking out a prior day's lows, support, that to me anyway is where you can start to get more aggressive on the other direction. So that's the S&P 500. We already sort of touched on the IWM here. This did grind higher. Now, if we zoom out here, it still hasn't broken out. It's nowhere near its all-time highs. We've talked about this. This is nothing new. We know this, that the Russell 2000 is well off of its highs here, but it has enjoyed that 30% plus rally from the lows. It has digested here for the past couple of months, and quite frankly, if this starts to break out here next week or over the next couple of weeks, we have a potential new rotational candidate where the small caps start to lead again if we start to get a sustained move over 160 to clear our way to 170. Not saying that has to happen, not saying it will happen, but when we start to think about, the S&P 500 starting to test highs, this looks tired, we suddenly will find ourselves, or have the potential to find ourselves with rotation into small caps, and suddenly this is ripping up and breaking through resistance, and the market continues to grind higher. And of course, that rotational effort, or how these trends sort of continue to persist in these bull trends. So keep an open mind. Again, doesn't have to happen that way. We could reject around 160 here. We could reject in the S&P 500 up around a retest here, and then start to put in a more significant pullback. But one day at a time, we'll see how the market reacts if and when it can get up there. Speaking of all-time highs, the Qs very close to retesting their all-time highs highs as well. This is the NASDAQ 100. You can see the prior all-time highs were back here in fall of 2018, approximately 187. We're trading at 185, so we're less than 0.5% away from its all-time highs closing here. And if we look at the actual NASDAQ composite, you can see pretty much the same thing. We're about, let's see, about 1.5% away from the prior all-time highs here. It does look a little thin. It does look like, we're really trying to stretch here. But again, until we start to break support, reverse trend, it's been a tough fight all along here as this market has ripped higher. So that is the market in a nutshell. Bulls continuing higher, rotation into financials, keeping things alive. We do see complacency with the VIX down around 12. So, just keep that all in mind. And of course, we have earnings season now, which is amongst us, right? Which kicked off officially this week. So that certainly is going to be the catalyst for the market. And I think if you want an excuse to run up to new highs here and to start challenging these all-time highs, that can be earnings season. And if you want a swift rejection here, I could also, point to earnings season as being the excuse there if we see disappointing guidance and companies, not really exceeding the street's expectation. So earnings season, it's coming up. Check your earnings dates and be mindful of those sectors. So that's really the broad market. Let's move into some other things here. We'll go to TLT next, which did continue its sell-off, minus 1% on the week. That was following up last week's almost 2% slide. So we suddenly find ourselves giving back most of this, or some, half, the majority of this breakout here from just a couple of weeks ago in TLT 123. That was the critical zone that we were looking at and we were analyzing in the past couple of videos. We did get that nice burst of momentum above it, and now you can see we're kind of back to and testing that area now. Bulls in their best interest to kind of hold in here around this 122.50 area. Any further, any steep acceleration lower, certainly going to not look good here for a potential failed breakout move that leads to a faster move lower. So keep that in mind, but we are at that inflection area going forward next week. So I think it'll be an interesting week for bonds. If we go to oil next, we can see oil here on the week was up 1.14%. We've talked about the fact that this is getting a little bit stretched, a little frothy here as it comes back into some prior supply and some prior influential levels. But so far the bulls are hanging tight. We spent most of this week moving sideways, but we did hold on to those gains. So once again, it's a tough market to fight right now. Bulls remain in control until and if we start to see some support breakdown. For me, below $13. If we start pulling back below here, then maybe we have something to work with there for a bigger pullback. But right now trends remain higher. Natural gas here on the week was slightly lower. It's basically been kind of a dud here for most of 2019. It's trading towards its lows. It's moving sideways just above its 52-week lows. Lots of consecutive red sessions here. Just take a look at how much red volume you see, bars down here on the lower end of this chart. So really sellers have been in control here, and until and if we start to see some life back over 24 to 24.50, it's really a kind of a dull to downward market. Last but not least, if we look at metals, we got GLD here on the week closed pretty much flat. They did try to get going here earlier in the week. That ended up failing. We had that nice pop to start the week. They ended up giving that back into the end, so we are right back now to this support area, this potential topping pattern here that gold has been in now for about the course of this year, almost this entire year, in fact. Maybe putting in some type of top here. If we start to lose, call it 121, gold's going to look to be in trouble. So something to pay attention to next week. And when we look at silver, it's in the same situation. It had an early week pop. It gave it right back, and it's trading back around $14, which is quite a significant area. It's where we broke out from in late 2018. So both metals kind of on thin ice here. We're going to want to pay attention to them. I think metals and TLT all kind of at action areas, and we'll want to see how they react next week. So those are some of the major markets there. Let's get into some sectors. Let's take a look at what worked and what didn't. When we sort from the best performing sectors on the week, we do have financials, thanks mostly to Friday's action here, up 1.84%. And notice it is tackling a pretty big stiff kind of resistance area. This has been more or less where the market has failed, where financials have failed for the past, 6, 7, 8 months, and we're starting to, or we're trying to now break above it again. MACD inching into positive territory and trying to lead here. So it'd be very interesting to see if we can hold on to these gains, if we can get some follow-through session and financials suddenly come alive. But we can see here that we're trying to work through all of this prior supply around that $27 area. Next, we have semiconductors, which closed at new all-time highs here if we're looking at the SMH. Can see it's been a very straight line move for the course of this year. We are approximately up in semiconductors 40% on the year, so quite remarkable of a straight line shot here. It is extended, it is overbought, it's real tough to chase this type of market, but when we look at it here, trends do remain higher. So if you're involved in the space, congratulations to you. Just be mindful of the risk, trail up the stops, all that fun stuff. But semiconductors moving to new closing highs there. And financials, XLK, number 3 on the rounding out the top performing, breaking to new highs here, closing at new highs. Also, like semiconductors, has pretty much been in a straight line. It's extended, it's tough to chase, but if you're in the space, if you're enjoying these gains, then look to protect them. Think about risk management, but enjoy the ride as it continues to move up to new highs. When we look at some of the worst performing sectors this week, we got biotech, which was negative on the week, 3.38%. This is really still just going lifeless here. It's fueling up in this range. It's gone sideways this entire year effectively between, call it 107 to 115. It's a pretty tight range for IBB, and it's spent many months now, almost 5 months inside this range. We kind of failed at 115 last week once again. We're back to the middle of the range. Not much to do here. We're still just kind of paying attention to see which way this ultimately breaks out, but IBB did not have a good week, and healthcare kind of subsequently didn't either, breaking down from this tight higher lows, lower highs pattern that we identified last week. You can see increased volume coming down on the breakdown. It happened Thursday, got some follow through on Friday. So XLV in kind of a tough spot here. Really going to want to see bulls step in and support this around $89, about 80 cents below where we're currently trading. Seems like a nice magnet to pay attention to is right around here for XLV going forward. Last but not least is energy. This is the third worst performing this week. It was down just slightly on the week here, and kind of coming to grips or back to say this consolidation. It tried to start to leave this breakout and leave this in the past here last week, but you can see we kind of pulled back and chopped around, and more or less still kind of moving sideways and very lackluster here. Bulls arguably still in control. MACD's in positive territory. The trend is inching higher here, but it's certainly not a big, rip-roaring rally here like we're seeing the straight line sort of semiconductors or XLK or anything like that. So that's it. That's the roundup for this week. I think covered everything. Again, earnings season. Pay attention to your holdings. Pay attention to what could potentially move your holdings when you get those similar sectors performing or reporting their earnings. So keep that in mind as well. So that's it. Thanks so much, as always, for tuning in and watching. You can subscribe on our YouTube channel or follow us on the Trade Risk, traderisk.com/blog. Keeps you up to date with all the latest that we're publishing. Have a great weekend, and we will talk to you next week.